Welcome to Tesla Stock Daily Drive, where we explore the twists and turns of Tesla's market journey with thoughtful insights and the latest financial news. I'm your host, Dusty, here to guide you through today's developments. Let's start by glancing over the market's recent performance. On the typically turbulent day of May 22, 2025, Tesla showed some intriguing moves. While major indexes, such as the Dow and the S&P 500, edged slightly downward, Tesla revved up, closing at $346.18, marking a 3.45% rise. It even outpaced the Nasdaq Composite, which only managed a modest 0.3% gain. Quite the feat for Tesla, especially after opening lower than the previous day's close. Trading was anything but smooth, with Tesla shares bouncing between a low of $331.39 and a high of $346.56. The company saw an impressive surge in trading volume too, with over 74 million shares swapping hands. This movement paints a stark contrast to the previous day, when Tesla shares dipped by 2.7%, mainly due to growing concerns about sales in the Chinese and European markets. Though the last year has been a roller coaster for Tesla, it's seen an overall increase of 79.3%, despite being down 17.1% year-to-date. Tesla's journey wildly spans between a 52-week low of $167.41 and a high of $488.54. Now diving into today's key financial stories. One dynamic contributor was Piper Sandler, reaffirming a buy rating for Tesla, amidst its broader consensus of mixed reviews: 59 buys, 16 holds, and 17 sells. Meanwhile, Zacks Investment Research labeled it a strong sell, pointing to downward trending estimates. And here's a curveball. BYD recently edged out Tesla in European EV sales, a stark reminder of the fierce competition Tesla faces. On the technical front, a golden cross pattern has appeared, a sign to some analysts of a potential rally ahead. This is set against the backdrop of Tesla's constant push in AI and robotics, presenting a bullish outlook despite market tremors. Stepping into company news, Tesla's recent Q1 2025 earnings report left some investors less than enthusiastic. Lower than expected earnings per share of 27 cents and a 20% drop in automotive revenue compared to last year raised eyebrows. Yet post-report, the stock has gained traction, outperforming the S&P 500 by climbing a whopping 33.5%. And interestingly, Elon Musk's announcement to dedicate more time to Tesla was warmly welcomed by investors. In the broader market context, a spike in long-dated U.S. bond yields and ongoing legislative discussions regarding tax cuts initially rattled investors earlier this week. However, a retreat in the 10-year Treasury yield offered some relief, subtly stabilizing the market. So what do we take from all this in terms of investment tips? Well, Tesla remains a company full of potential and risks. Balancing its ambitious ventures in technology against real-world market challenges is key. Keeping an eye on how Tesla manages its costs and pushes forward with large-scale projects like its proposed robotaxi is crucial. As we close our session today, remember that understanding these market dynamics requires patience, keen observation, and sometimes impartial observation. In the world of stocks, especially with a company as trailblazing as Tesla, having a steady compass is invaluable. Thanks for joining me today on Tesla Stock Daily Drive. Until next time, always remember, when the dust settles, only the truth remains. Stay informed, stay thoughtful, and keep your investing curiosity alive.